7 key reasons why 2025 could be absolutely insane for crypto. Welcome to the channel where we break down markets, crypto, and everything in between. Buckle up because today, we're diving into 7 reasons why 2025 could be a wild year for cryptocurrency and markets in general. Alright, let's talk economics, but don't worry, I'll keep it simple. Remember the financial crisis of 2008? Yeah, not exactly a fun time, but what followed those dark days, a period of economic recovery. Analysts are seeing similar patterns in the US economy right now. We're talking about the total credit to the private non-financial sector. Basically, it's a fancy way of saying how much money businesses and people are borrowing. If history repeats itself, we could be in for a period of serious economic growth. More jobs, more money flowing into the economy, and yeah, more cash for crypto. Okay, so we've talked about the US economy, but what about the rest of the world? The global economic landscape is vast and complex, with each region facing its own unique set of challenges and opportunities. Global economic indicators are painting an interesting picture right now. Some regions are showing signs of recovery, while others are still grappling with significant hurdles. Take the manufacturing index, for example. This index is a critical measure of economic activity, reflecting the health of the manufacturing sector across various countries. It's a key indicator of economic health, and right now, it's showing signs of bottoming out. This could signal a potential turnaround in the global economy. When manufacturing picks up, it usually means more jobs, more spending, and more economic activity overall. This ripple effect can boost consumer confidence and drive further growth. Combine that with potential policy shifts such as changes in trade agreements or fiscal policies, and we could be on the verge of a synchronized global economic upswing. These policy changes can create a more favorable environment for businesses and consumers alike. But hold on a second. Global uncertainty is a big factor. Issues like trade wars, political instability, and natural disasters can all impact economic stability. Geopolitical tensions, unexpected events, you name it, can throw a wrench in the best-laid economic plans. These disruptions can lead to market volatility and affect investor confidence. So, while the potential for a global upswing is there, it's not a guaranteed win. We must remain vigilant and adaptable to navigate these uncertainties. By staying informed and understanding the potential risks and rewards, we can position ourselves to make smart decisions. Knowledge is power, and in these uncertain times it can be our greatest asset. Alright, let's talk about something called M2. It's a crucial concept in understanding the flow of money in the economy. M2 is basically a measure of the global money supply. It includes cash, checking deposits, and easily convertible near money. Think of it like all the money sloshing around in the world, cash, savings accounts, you name it. It's a broad measure that gives us a sense of the liquidity in the financial system. Historically, when M2 goes up, asset prices tend to follow. This is because more money in the system often leads to higher demand for assets, driving their prices up. Between 2022 and now, M2 has climbed by a whopping $11 trillion. This massive increase has had significant implications for various asset classes. And guess what happened to Bitcoin during that same period? Its value surged dramatically, reflecting the broader trend in the money supply. Its market cap increased 5-fold. This shows a strong correlation between the increase in M2 and the rise in Bitcoin's market value. Projections suggest that M2 could peak around late 2025 or early 2026. If these projections hold true, we might see even more dramatic shifts in asset prices. That means we could see a massive influx of money into the system, potentially fueling a final crypto market top before things cool down. This could be a critical period for investors. Timing the market is incredibly difficult, and there are always risks involved. Market conditions can change rapidly, and unexpected events can have significant impacts. But understanding these macroeconomic trends can give you an edge and help you make more informed investment decisions. By staying informed, you can better navigate the complexities of the financial markets. Alright, let's talk about the people who love to print money: central banks. Inflation is still a thing. It's not as bad as it was a year ago, but it's still out there. To combat inflation, central banks have been raising interest rates like crazy. But globally, we're seeing the most coordinated rate cuts since the 2008 financial crisis. When rates go down, it usually means good things for risk assets like crypto. Lower rates make it cheaper to borrow money, which encourages businesses to invest and consumers to spend. But if central banks lower rates too quickly, they risk reigniting inflation. Keep a close eye on central bank announcements and interest rate decisions. Chapter 5. AI hype or revolution. Let's face it, AI is everywhere these days. It's writing poetry, composing music, and even generating those deep fake videos that are both amazing and slightly terrifying. AI isn't just a fad, it's a technological revolution that's transforming industries left and right. This revolution is spilling over into the crypto market. We're seeing AI-powered trading bots, decentralized prediction markets, and even AI-generated NFTs. Some analysts are predicting that tech stocks could jump by as much as 25% in 2025, fueled by AI innovation. The intersection of AI and crypto is incredibly exciting. AI could very well be the catalyst that propels crypto to new heights in 2025 and beyond. Chapter 6. Institutions are coming. Remember when Bitcoin was just a fringe internet currency? Those days are long gone. Institutional investors, the big players with deep pockets, are finally entering the crypto market. The launch of the Bitcoin ETF was a watershed moment. It opened the floodgates for institutional money to flow into Bitcoin. We're talking about $36 billion in inflows so far, and some estimates suggest that we could see $100 billion flow into Bitcoin next year alone. Institutional investors are starting to dip their toes into other cryptocurrencies as well. Increased institutional adoption is generally seen as a positive development for crypto. The institutionalization of crypto is only going to accelerate in the coming years. Chapter 7. Bitcoin, the ultimate safe haven. Alright, let's talk about the big daddy of crypto, Bitcoin. It's the first and most well-known cryptocurrency, often referred to as digital gold. Bitcoin has always been positioned as a hedge against inflation, a decentralized store of value that's immune to government interference. Unlike traditional currencies, Bitcoin's supply is capped at 21 million coins, making it inherently deflationary, but it's starting to gain traction as a strategic reserve asset, and that's a game changer. This shift is not just among individual investors but also at the institutional level. Countries like Brazil, Russia, and Japan are openly discussing the possibility of adding Bitcoin to their national reserves. This could mark a significant shift in how nations manage their financial stability. Corporations are getting in on the action too, with MicroStrategy leading the charge. CEO Michael Saylor has been vocal about Bitcoin's potential to preserve corporate treasury value. Central banks hold trillions of dollars in foreign exchange reserves, primarily in US dollars. However, the reliance on the dollar is being questioned more than ever. But as faith in the US dollar wanes, countries are looking for alternative stores of value. Bitcoin, with its decentralized nature and limited supply, is becoming an attractive option. Enter Bitcoin. It's scarce, decentralized, and not controlled by any single entity. This makes it a unique asset in the global financial system. If more countries start adding Bitcoin to their reserves, the implications for global adoption are massive. It could redefine the global financial landscape. We could see a world where Bitcoin is no longer seen as a speculative investment, but as a legitimate store of value. This would fundamentally change how we perceive and use money in our daily lives. So, there you have it. 7 reasons why 2025 could be absolutely insane for the crypto market. We've got a potential economic boom, a global money supply explosion, central banks playing with fire, the AI revolution in full swing, institutions piling in, and Bitcoin emerging as a strategic reserve asset. It's a recipe for both incredible opportunities and unprecedented volatility. Are you ready for what's coming? Because the crypto market doesn't wait for anyone. Now is the time to educate yourself, do your research, and develop a solid investment strategy. Let's make 2025 legendary.